Sandip Sabharwal joins in on the show right now. Sandip, hi, good morning. Good to have you on the show. Quite a critical month, this one, Sandip, and especially after the weakness that we've seen all through October. You've got the US elections, you've got the FOMC meeting as well this week, you've got the jobs data, hoping for a stimulus from China as well. Do you think our markets will continue to be under pressure?
I think, Asha, in the short term, the market movement has been more dominated by funds flow, and we have seen a huge FI outflow. So initially, when the outflow started, my estimate was around $15 billion could flow out because of realignment of emerging market allocations. I think that's happening. There's news of the Canadian pension fund being a seller because of whatever is happening between India and Canada, but there's no way to verify that at this stage. But nevertheless, I think that's led the market, especially on the large cap side, to more reasonable levels. The festival season sales ultimately, I think last 15 days picked up. And if we see the auto sales data, if we see many other data coming out of various platforms, etc., they seem to be reasonably buoyant. And plus, we now enter the huge marriage season after a long time where around 48 lakh marriages are expected to happen over the next 2 months. I think markets have largely adjusted, I would say. Uh, what the reaction of the global markets will be to US elections and whoever wins is tough to say. It's unpredictable. So I think that's something we need to watch out for. But from the Indian large cap, Nifty and Sensex, my personal view is that downside, if at all, from the current level should not be more than 2-3%.
So, Sandeep, since you believe that a large part of the selling is now behind us, do you think the time has now come to actually start buying the market and your individual stocks?
On the large cap side, yes. So as the results have trickled in and based on price movements, I think on the large cap side, few clear winners seem to be visible. If you see on the auto side, Mahindra and Mahindra, the way they are delivered on festival season numbers, as well as the pickup in tractor sales. And we've recently seen a correction in the stock price. So that I think looks reasonable. Bharti Airtel, again, the pickup in ARPUs has been quite strong, and next 2-3 years should be quite good. There also the stocks, I think, corrected 10-15% from the top. And then on the banking side, Axis and ICICI both came out with good results. ICICI, of course, is more near 52-week highs only after the recent, it corrected a bit, then it's bounced back. So I think, but I still believe these banks should continue to do well. L&T delivered very strong numbers and surprisingly high order booking numbers, which was much higher than most analysts' expectation. Many analysts actually downgraded pre-results, expecting a low accretion in orders, but the management commentary actually was quite positive. So I think that should be one stock. Another stock which should be part of core portfolio.
Sandeep, I mean, this news was going viral over the weekend, right? That Berkshire Hathaway is sitting on the pile of cash that they are. Is there any correlation to his selling in a Bank of America or Apple for Indian market watchers?
Not so much in the short run. I think they have been selling for a long time now, last few quarters, and they might have their own reasons related to how they see the US economy or some of their holdings performing, or their expectation of a downturn in the US economy. So a downturn in the US economy was expected for a long time, but it's been surprisingly resilient. So let's see how that goes. So their time horizons also tend to be more near 5-10 years or more, rather than the normal investor horizons of 1-2-3 years. So I think the perspectives could be quite different.
Sandeep, so if one has to really take a view on the market, we've got a recent correction which is giving a great entry points. Where do you think it is time to now start buying the fear? Whether downside could be 10%, volatility could be 15%, who knows? But you are clear that you would be a buyer in that space, that stock or that company.
So I think like we were talking earlier, on the large cap side, value is getting created in some of the holdings where the delivery has been strong, outlook remains good, and the stocks have corrected, which include stocks like Mahindra and Mahindra, ICICI Bank, L&T, Bharti Airtel. I think all of them look good from a longer term perspective. And many of the some of the consumer names also, if they have corrected post their quarterly updates. So if they end up correcting 5-10% more, it could be stocks like even HUL, Godrej Consumer, Badabar, many of them. If they correct further, I think we can buy them expecting a uptick uh, as there is a revival in consumer. So consumer demand revival has to happen at some stage. Now, it should have happened by now. It's not happening, but eventually it will. And then when that happens and those news flow starts coming in, then the consumer stocks will be up. So many of them could easily deliver 15-20% and just go up to their previous highs if they correct a bit more. So I think watch out for those.
Sandeep, let's work with the assumption that the government spending in the second half will pick up. The government spending is much lower than what the average budget estimates or what the budget estimates are. So I'm assuming that there could be a serious acceleration in the government spending in the run up to the year end. If that is true, what does that mean for economy related sectors, cement, steel, infra, construction companies?
Government spending should pick up because fiscal deficit seems to be well under control, at least at the central government level. So projects have already been awarded. A lot of projects are on. So I think funding for those, on those projects, etc., could continue. And many of these infra companies have also corrected in the recent sell-offs. So I think some of them could present opportunities. Allocations could increase towards more of the government's favorite projects like Jal Jeevan or the road projects or even the solar projects. I think that's where a lot of investments could go.
What becomes a clear buy now? Will L&T be a clear buy? Could NCC be a clear buy? Could NBCC be a clear buy? One works with an assumption that the second half will be much stronger for the government spending. Which is the go-to sector? Could it be cement? Could it be L&T? Could it be a construction company? Could it be a government PSU?
The cement companies should do much better in the second half, but unfortunately, most of the cement stocks have not corrected in line with the poor results of the last few quarters. So valuations are not attractive from my perspective. But on the construction side, yes, many of the companies which have debt under control or and have are getting strong orders and who have also recently corrected. So I talked about Alu contracts in the Diwali fix. Then, like you rightly said, NCC is very well placed, and there will be a few others who are focused on urban infrastructure projects, etc., which could do well.
Enough. Meantime, also taking stock of some of the fresh brokerage notes this morning. Sun Pharma is on the radar. They're talking about how UBS is talking about how the settlement is one of the possible options with respect to one of the preliminary injunctions on one of their drugs. And JP Morgan believes that their plan to file an appeal against the judgment is going to closely be watched out for. Meantime, of course, all of the auto counters are in the spotlight, and Kotak Securities has got a buy rating from an ad on M&M saying that the tractor industry is poised for a recovery in the second half and that they will continue to look at M&M as one of the top picks within the auto space. What about you, Sandeep? Where do you stand when it comes to auto?
Like I said, that M&M looks very well placed. Even the retail sales data for Maruti was not bad, and Maruti tends to be typically a bigger beneficiary during the marriage season, and apparently 48 lakh marriages are planned over the next 2 months in India. So I think a lot of sectors could see a pickup because of the marriage season, because uh, last few months there were very few marriage dates, and now there's going to be a huge plethora of those, and the total economic impact of that is expected to be I think more near 8 to 10 lakh crores. So I think those are the stocks to look at, and even some of the two-wheelers could pick up.
But Sandeep, how much of this auto recovery is real? What we are looking at are essentially the numbers what we have. These are wholesale data points, which is okay, how much companies have, in a sense, dispatched from their factories. But the ground reality is that discounts are higher. Ground reality is that there are freebies which are on. If you're buying a small car, you're getting insurance free. If you are buying a large car, you're getting a great EMI scheme. Ultimately, it will have an impact on margins per se, because at the realization level for the company, there is a significant drop.
So there are two, three things which are happening. One, premiumization is increasing. So to that extent, the value of the cars sold by each of the automakers is increasing. So that's why the value growth tends to be much higher than the volume growth. Secondly, they are going through a benign input cost pressure scenario where steel prices are hovering near uh, multi-year lows, and a lot of the other input prices are also down. And to that extent, they don't have those pressures. So obviously, discounts to lure customers is the right strategy. Now, the other thing is that over the years, because of increasing technology, implementation of SAP and uh, other monitoring tools, inventory monitoring tools by many of the companies, now the inventory pileup doesn't last for more than a few months. There is inventory pileup, these companies come quickly correct. And like the Maruti chairman said that they have brought it down to 30 days already at the end of October. So I think the inventory levels, X of maybe one or two companies, should not be such a big concern.
Sandeep, what's the easy go-to play in this energy transition theme? Some are betting on solar, some are betting on battery storage, some are betting on EV. Energy transition is the real deal. I mean, it will pick up. Whether investors will make money in it on is debatable, but that theme will get implemented.
Yeah, from the three you quoted, I think battery storage is more durable because I think that's where there could be some entry barriers also, uh, and that's where a significant investment is still. So it's just about started. So I think it's a long way to go. On solar, my view is very clear. I think many of these companies are going to go bust in 2, 3 years. The way solar panel and solar cell investments are happening in India, every second day, some new group, some new company setting up capacities. In 2, 3 years, when this sudden rush of installations goes away, many of these companies, in any case, don't have cost structures which can justify long-term profitability. So I think that's where one has to be careful. So people who are short-term, they could possibly play out few quarters and make money out of it, but I would not be doing that.
Your take as well, Sandeep, as to what the outlook is on some of the, BPC players like a Nykaa, because there's a report from Jefferies. They've maintained a buy rating, and they've spoken about how the grooming, makeup habits are evolving, and India is a key growth market in light of this. How do you see players like a Nykaa benefiting in light of the extreme competition?
I would have thought they should have done better than what they are doing, but the numbers don't reflect that. And plus, we have increased competition coming from various players, including Reliance Retail, into formats and products which are very similar to that of Nykaa. Nykaa has built a formidable platform, uh, so the key is to watch how they grow and whether they can move into profitability as sharply as what Zomato's done. I think that's something we'll need to watch out for. Last few quarters, I've been waiting out, watching the results, but it's not giving the confidence yet to buy into it. I think at some stage that could happen, and that should happen.
What is a good play in, let's say, this entire BPC segment? HUL is mixed. You would imagine that none of the other companies give you a clear bet on this entire beauty and personal care segment. Is it Honasa, which is Mamaearth, or is it, to some extent Nykaa, which in a sense is a platform company?
Even Honasa, if you look at it, uh, they should have done much better. So I think the initial reported results seem to be good, but then they flooded the market with so much inventory, and I think that inventory correction is happening now, and that news in the market. So that's the reason the stock's been underperforming so much. So again, many of these companies started with online low-cost platforms, then they've got offline, and where the cost structures obviously are higher. I think these people need to get their models correct. And after that happens, I think given their product profile, both of these companies, Nykaa and NASA, at some stage should be investment worthy.
Okay. Meantime, Sandeep, going to let you go. Thanks so much for taking time out and joining in, sharing with us your outlook on the markets.
If you like this video, then like, share and subscribe to ET Now.